measures proactively. It has to be borne in mind that incorrect valuation of liquid assets can give a false sense of short-term liquidity resiliency, which is not desirable. And whatever I am saying with reference to banks would be in a large measure relevant for NBFCs also. Now, the Reserve Bank on its part is reviewing the liquidity coverage ratio framework, that is the LCR framework, to address the emerging issues. This will be done after detailed public and stakeholder consultations. We will be putting in place a discussion paper or a draft circular and inviting your comments and comments of all stakeholders before taking a decision. In fact, that is the consultative approach which we have adopted in our regulatory actions in the recent years. In the latest annual report for the financial year 23-24, which we published in the month of May, there is a separate box item, and in the annex it has been listed, we have listed out the number of regulatory measures which were taken by the Reserve Bank and which were preceded by consultation with stakeholders. Interest rate risk is inherent to the business of banking. It goes without saying. Last year's banking crisis in certain countries, as I have said, have also shown the importance of managing interest rate risk in the banking book. The books of banks are highly sensitive to interest rate fluctuations. It goes without saying that banks need to manage their interest rate risk exposures using processes and symptoms commensurate with their business models, risk profile, earnings and capital levels, complexity and scope of their operations. The third point I wish to highlight relates to cybersecurity and IT-related risks. In an era of increasing technological footprint and rapid digitalization, it is critical that due emphasis is placed on managing cybersecurity and IT risks. Globally, there are growing incidences of cyber attacks on the IT systems of banks and other financial institutions. This necessitates high level of vigil and strengthening of the IT systems by banks, NBFCs, and other financial institutions. The Reserve Bank's supervisory assessments continue to stress on the importance of improving information technology governance arrangements, making the technology systems, processes, and infrastructure more resilient, and mitigating the third-party risks. Banks and other financial entities need to continuously invest in technology while also developing the right kind of capabilities to successfully tackle these challenges. In fact, one can even go to the extent of saying that going forward in a few years, the convergence between technology and on one side and the banks and NBFCs on the other hand, there will be greater convergence, and banks and NBFCs, to remain competitive, have to adopt technology, have to invest not only in technology infrastructure, but also invest in building up internal human skills and capabilities. The fourth point I wish to highlight relates to digital frauds. Another area of concern is the rise in digital frauds. Though many of such frauds are due to various social engineering attacks on customers, there is also a rapid increase in use of mule bank accounts to perpetrate such frauds. This exposes the bank not only to serious financial and operational risk, but also to reputational risks. Banks therefore need to strengthen their customer onboarding and transaction monitoring systems to monitor unscrupulous activities, including suspicious and unusual transactions. In fact, this is a point which we specifically discussed with the bank CEOs in the first week of this month, when we had interaction with the CEOs of both public and private sector banks. And it is necessary to monitor the transactions are being undertaken in various accounts. We have come across cases where an account, the volume of transactions is very less for a long time, but suddenly there is a spurt in the volume of transactions. There are also transactions taking place at odd hours, in late hours of the night. Now, systems have to be built in, and I'm happy to note that banks are putting in place the required systems to monitor these kind of transactions which are happening, because they are potentially risky, and it has to be really seen why suddenly an account which was doing, very few transactions and the balances or the account balance was low, suddenly how the balances go up, come down, there are fluctuations and there are too many activities and at very odd hours. This also requires effective coordination with law enforcement agencies so that concerns occurring at the systemic level are detected and curbed in time. The Reserve Bank is working with the banks and law enforcement agencies to strengthen transaction monitoring systems and ensure sharing of best practices of control of mule accounts and prevention of digital frauds. I would again impress upon banks as well as NBFCs and other financial institutions to ensure that necessary measures are taken, including for customer education and awareness, to maintain public confidence in the use of digital banking, in the use of technology in our financial sector. The fifth point I wish to highlight relates to third-party risks. In the current business environment, it has become necessary for banks and other financial institutions to outsource certain functions to third parties. While doing so, it is necessary to exercise strong oversight and monitoring of such outsourced activities. Regulations clearly provide that outsourcing of any activity by a regulated entity does not diminish the obligations of the regulated entity itself. Banks and NBFCs also need to consider whether cost optimization strategies are leading to over-dependence on third-party vendors, even for critical functions, without commensurate oversight. We have seen a few instances of this and have dealt with it in the recent past. Strong governance and oversight mechanisms with regard to third-party relationships for both IT and non-IT services are essential components of resilience for any financial institution. The protocol with the outsourced agency should clearly define the roles and responsibilities of both the parties in such relationships. The Reserve Bank has already issued guidelines on IT outsourcing and draft directions on managing risks and code of conduct in outsourcing of financial services. The sixth issue relates to issues in unsecured retail credit. Now, I have attempted to highlight all the contemporary issues and touch upon them as briefly as possible. A copy of this address will be uploaded in the Reserve Bank of India website. So those of you, as well as your viewers who are watching this program online, you may have a look at this if you wish. Now, with regard to unsecured credit, I would like to say that the rise in the share of retail portfolio within the overall bank credit is a recent system-wide trend. As you may be aware, the Reserve Bank has taken certain preemptive measures in November last year to ensure that growth in these segments does not lead to potentially excessive risk buildup. These measures appear to have led to a certain degree of moderation in the targeted segments, as observed in our recent financial stability report. It needs to be emphasized that the delinquency levels and leverage in small-ticket consumer loans warrant enhanced vigil. Matters such as fixing limits on unsecured exposures are left to the banks and their boards. It is also left to the boards or the management of the NBFCs. It has, however, been observed by our supervisory teams that in some entities, it is noticed that some entities have fixed very high ceilings, even where they have already a high exposure. While it is not our intention to be prescriptive on such matters, banks and NBFCs are expected to show prudence and avoid any form of exuberance in the interest of long-term sustainability of credit growth and in the interest of long-term resilience and health of the concerned bank or the NBFC or other lenders, as the case may be. The seventh point relates to conduct-related issues. Fair conduct is not just a regulatory requirement, it's a core business requirement. I'm emphasizing on this issue because conduct risks may arise when the going is good, as it prevails now. Conduct risk needs to be seen together with risk culture. Fair conduct and practices foster consumer confidence and public trust in financial institutions, and they also strengthen their resilience and stability. The Reserve Bank has issued regulations from time to time to ensure fair and reasonable conduct by the regulated entities. In the recent past, guidelines have been issued on key fact statement. You would be aware that every loan we have mandated should be accompanied by a key fact statement which captures, broadly the significant material aspects of the loan, including in particular the annualized rate of interest. So guidelines have been issued on key fact statement, on penal charges in loan accounts, on reset of floating interest rate in EMI-based personal loans, and release of movable or immovable property documents on repayment or settlement of loan accounts. We still come across instances of regulatory entities resorting to high-handed recovery practices, framing non-transparent loan contracts with inadequate disclosures of important terms of non-disclosure of charges, levying excessive interest rates, especially in microfinance loans. Now, let me say that what I am pointing out, I would like to emphasize that what I am pointing out are cases are outliers. Overall, I can assure you, and I would like to emphasize and stress that overall, our financial sector, consisting of banks, NBFCs, and other entities, overall, they remain robust. Overall, there has been considerable improvement in governance, in risk management, in compliance, or in discharge of assurance functions in all these financial entities in the recent years. But we still see outliers here and there, which has to be, and in those entities, it is our endeavor to see that, compliance is ensured, there is better risk management, and there is, improvement in their governance. So overall, it should not be assumed that there is a big problem. Overall, the system remains very stable and healthy, but there are outliers, and what I am addressing is those, few cases which are outliers, which have a potential to sort of, spill over to other entities also. Now, critical issues relating to conduct sometimes get sidestepped in the pursuit of short-term gains. For instance, charging of very high interest rates by certain regulated entities, especially for microfinance loans, is not in order. I would like to reiterate what I said in my monetary policy statement on June 7. That is, regulated entities should use their regulatory freedom responsibly to maintain fair and transparent pricing of small value loans. Unfair or usurious practices under microfinance loans would compel us to have a relook at the revised regulatory framework for microfinance loans, which were issued in March 2022. The 8th point relates to transition financing. Climate change poses a growing threat to economic growth, and it needs immediate and sustained action on all fronts. Recent extreme weather events globally and also in India, such as heat waves, droughts, floods, and wildfires, are stark reminders that we have to take decisive actions. The Reserve Bank has initiated steps to address the risks posed by climate change to the financial system. Since we commenced this journey, several initiatives have been undertaken, which inter alia include issuance of framework for sovereign green bonds, acceptance of green deposits, and issuance of draft disclosure framework for climate-related financial risks. Going forward, our overarching approach would be to consider sustainability aspects as a focal point of the entire credit ecosystem. The onus of spearheading sustainability initiatives will, however, reside with regulated entities eventually. These entities have a crucial role to play in climate action by taking steps to provide climate finance. They need to explore innovative transition financing models. At the same time, they should also be mindful of associated risks and greenwashing concerns. In addition, the regulated entities may undertake transition planning to prepare for risks and potential changes in the business models of their borrowers who may undertake such transition. The ninth and the last point I wish to highlight relates to private credit markets. Private credit as a preferred alternative mode of capital mobilization is growing rapidly. It is emerging as an attractive investment avenue for investors with high risk appetite. While these markets may carry economic benefits by providing a greater pool of financing outside of regulated financial markets and institutions, and their risks appear to be contained at present, it is important to bear in mind that vulnerabilities and interconnectedness in these markets can amplify negative shocks and pose financial stability concerns. We continue to remain watchful of such developments and would welcome ideas and thoughts in this regard. In conclusion, I would like to emphasize that banks and financial institutions, NBFCs and others have a critical role in taking India to the next phase of economic growth. Regulated entities of the Reserve Bank like banks and NBFCs are well positioned today. I would like to emphasize regulated entities of the Reserve Bank like banks and NBFCs are well positioned today in terms of capital, asset quality and profitability to contribute to the economic acceleration which we are expecting in our country. Embracing technology and innovation while remaining focused on governance and risk management can ensure sustained capacity and resilience of the financial sector and enable it to meet the needs of our growing economy. While much has been achieved, there is still more to accomplish. With these words, I thank the Financial Express team for giving me this opportunity and wish the summit all success. Thank you. Namaskar.
Thank you, sir. We appreciate your profound perspectives on the future of India's economy and the financial sector. May I invite Mr. Shamal Majumdar, the editor of Financial Express, to join us for a fireside chat. Mr. Prakash, over to you.
So, Governor, you referred to some reverse swings coming your way, but a governor who plays with such a straight bat, it's difficult to, instead the bowler gets hit out of the park. But I have a tough job on hand because the governor is sitting with me and I'm been told to watch the clock because there is a time constraint. So let me be as quick as possible. Governor, my first question to you is, India needs to, according to RBI's own research paper, India needs to grow at about 7.6% annually over the next 25 years to become a developed nation. Now, to fund that kind of growth, the financial system has to be well capitalized. There has to be a lot of new financial institutions also coming in of all shapes and sizes. Given that background, is it time for the RBI to shed its hesitance, or I should say reluctance, to allow business houses, private equities, venture capital funds to have larger stakes in banking entities? Your views?
You see, banks are different. We have articulated on this issue a number of times. Banks are different, they're different from other businesses. Experience world over has shown that real sector companies, when they enter the banking space, there are potential conflicts of interest and also the issue relating to related party transactions also is a major issue. And we had in our country, I mean, we had several private banks earlier. Of course, that was, I'm not going into the issue of bank nationalization, why it was done and what was the outcome and all that. But there are there are potential conflicts of interest. And experience world over has shown that it will be very difficult to, monitor or to regulate the, to sort of prevent the related party transactions. So the risks involved are very high. So therefore, world over, although there is no specific bar on, take the case of United States, for example, or take any other country, emerging market economies, it has not been done. And there are good reasons why it has not been done. So far as India is concerned, the banking penetration has been quite wide. Today, the number of banks, the number of bank branches have become less relevant. I will not say irrelevant, but they have become less relevant. Because technology is achieving that for you. The reach is being achieved through technology. The reach, the customer reach and the reaching the, the far-flung areas is being achieved through technology. It is also being achieved through several new business models. Take, for example, the BC model, the banking correspondent model, or the handheld payment equipments which they carry. So therefore, it's what India needs is not proliferation in the number of banks. What India needs is sound banks, healthy banks, well-governed banks, which we feel will be able to mobilize savings throughout the country through technology, which will also be able to meet the credit requirements throughout the country through technology. And you have new players, especially in the NBFC sector, who are entirely, digital lenders, for which the Reserve Bank has come out with detailed guidelines. Having said that, I would like to say that we are open to receiving new applications for setting up universal banks. And as and when an appropriate fit and proper application comes, the Reserve Bank will not hesitate. I'm not implying for a moment that the today's number of banks is enough and no more license will be granted. That's not, by any stretch, I'm not suggesting that. All that I'm saying is that if applications are received, we will certainly examine and take a call.
But at this point, your RBI is ruling out entry of business
At this
house.
point, there is no thinking in that direction.
Right, right. Your predecessor, Mr. Subbarao, in his book, both of you have worked both in the government as well as the RBI. Now, in his book, and I quote him, he says, there is little understanding and sensitivity within the government on the importance of central bank autonomy. He also wrote that he was invariably discomfited and annoyed by this demand that the RBI should be a cheerleader for the government. Now that you have spent 5.5 years most in RBI, the central bank governor, and especially it is important because you came in at a time when there was a huge tension between the two institutions. What has your experience been, and how do you respond to the fact that there is always this demand on the RBI that you be a cheerleader for the government?
No, nobody expects RBI, at least I am saying from my experience, nobody expects RBI to be a cheerleader. I have had no such experience. And the coordination between the central bank, that is RBI, and the government during crisis times like the COVID were, I think, very smooth. And it was the coordination and cooperation between the fiscal and monetary authorities which ensured that our economy revived, and revived very fast and revived stronger in the aftermath of the COVID-19 pandemic. There have been differences of opinion, because differences between fiscal authorities and monetary authorities, between government and central banks, are inherent in the system. There are bound to be differences because it is inherent. But what we have done is to sort of discuss this directly between the government and the Reserve Bank, and whenever there are differences of opinion, they have been internally discussed and they have been resolved.
Now, on interest rates, the invariable question on interest rates, the minority view in MPC was that as interest rate trend downwards, the real repo rate goes up, so long as RBI holds the line. Second, growth may be sacrificed on account of interest rates staying higher for longer. Then there is the Fed chairman saying the other day that he will not wait till inflation reaches the 2% level. We also heard a BIS official saying that while inflation target should be a guidance for central banks, it should not become an obsession. Now that you have already said repeatedly that you are focused on a 4% sustained inflation rate, but that is not visible at this point of time. So would RBI be open to reconsider its stance?
You see, first thing I want to clarify is that BIS report, quoting a certain BIS official, he has been actually quoted out of context. When he said that, what was that sentence you said?
That, while interest rate should be a target should be a guidance, it should not be an obsession.
Yeah. He said it in a different context. I have read that full article, and he said it in a different context. What he meant is that just because you reach the inflation target, it doesn't mean that you start cutting rates. He was saying it from that perspective. So the first part of his sentence says that, the target is not very sacrosanct. It doesn't mean that once you,
Yeah.
So therefore, what he meant is that just because you reach the target, don't start cutting the rates. So he was saying in a different way altogether. In fact, I would suggest that that article is read in totality, because what he is arguing in that article is exactly the opposite. He is saying that inflation targeting is very important and central banks should stay the course. Now, with regard to growth coming nearer home, with regard to India, with regard to growth sacrifice, we monitor the growth numbers very carefully. And I have said it on a number of occasions, because the law in our country, the Reserve Bank of India Act, says that Reserve Bank is mandated to maintain price stability, and price stability in terms of maintaining inflation at 4%. So we are mandated is to maintain price stability, keeping in mind the objective of growth. So in all our monetary policy decisions, growth aspect is always kept in mind. And I can say that even with the current interest rates, the growth in India has been very robust. Last 3 years, the average growth rate has been 8.3% in the last 3 years. This year, our projection is 7.2%, and we are very optimistic that 7.2% will be achieved. In fact, the nowcasting team of the Reserve Bank, and it has been published in the State of the Economy Bulletin article which we released yesterday, the nowcast team of the Reserve Bank believes that the first quarter growth, that is April to June growth, is 7.4%. Although our internal, what MPC said was that it is 7.3%. And we see even today the growth momentum in the second quarter continues to be very strong. The fourth quarter of last year was 7.8%. The first quarter, the numbers will be released in the end of August. And end of August. So the first quarter of this year, the momentum of economic activity is strong, and we see clear evidence of that momentum being sustained in the second quarter also. So growth is holding steady. Now we have to therefore focus clearly and unambiguously on inflation. And this talk of, neutral rate, etc. In fact, another bulletin article by our researchers yesterday have shown that now that, that earlier neutral rate of 0.8 to 1% was immediately in the aftermath of the COVID pandemic, when potential growth was low. But now that the impact of COVID is well behind us, the potential growth is now gone up, and the neutral rate of interest is now pegged in the range of 1.5 to 1.9%. So even if you were to argue that the real rates are high, it's not so, because the real rates, the range is 1.4 to 1.9. And also the point is, I have said it again a few days ago, what is our target? Our target is inflation. And what are we supposed to keep in mind? We are supposed to keep in mind growth. We look at all aspects that are happening in the economy. We look at international developments. We also look at real interest rates. It's not as if we don't look at them. Finally, we take a call. The target is inflation. The target is not neutral rate of interest. So therefore, a neutral rate of interest, again, is subject to a lot of uncertainty. It depends on your assessment of potential growth versus my assessment of potential growth, or versus somebody else's assessment of potential growth. So target is inflation. Monetary policy has to be geared to achieve that, keeping in mind the objective of growth. Neutral rate, etc., are theoretical, abstract concepts that cannot determine policy in the real world. I'm sorry for those long answers.
No, it's perfect. There has been a series of actions against NBFCs, banks, and other institutions for non-compliance. Are you worried about this overall culture of non-compliance? Do you think too many institutions are taking unacceptable risks?
No, let me emphasize, as I just did a little while ago, that it is not so. There are outliers. Totally, if you look at, we have 9,000, we have about 90 odd banks. We have about 1,400 odd urban cooperative banks. We have about 9,400 NBFCs. Now, all these are lenders. If you put together, it's about 11 or 12,000 banks and NBFCs and cooperative banks also. Out of that, we have taken action against maybe 4 or 5 or 6. And after 6 months or after 8 months, when there is compliance, we withdraw the business restrictions which we have imposed on them. So action has been taken only against about 5 or 6 or 7 entities out of this universe of 11,000 odd financial entities. So therefore, I think it's not correct. I think I want to dispel that sense that Reserve Bank is chasing and going all out to is on a we don't play a 20-20 game. I mean, we are there in test cricket. We have to be steady in our approach. We engage with wherever, and these are outliers. Let me very clearly say, these are outliers, very few outliers. Whenever we see such problem, our first effort is to engage with them bilaterally. We engage for months and sometimes more than a year also. But where we see that the compliance is not happening, or the compliance is slow, or it is not adequate, there we have to impose business restrictions, because the idea is not to penalize them. The business restrictions are imposed in the interest of the customers. Because if the business grows, when there is an inherent problem, eventually the customer is put into difficulty. So all our actions have been taken in the best interest of customers' interest. So therefore, we take action after months or after more than 1 year of engagement with the entities wherever we take, and these are only very few cases. Overall, the system remains very resilient and very strong.
Governor, the Union budget is just about 3 days away now. Now, while the GDP grew at about 8%, over 8% actually in FY24, the domestic consumption growth is half of that, 4%. So what would you like to see the fiscal authorities do on that?
You see, it's not proper for me to comment on the budget, especially because it's just, next week. So I don't want to comment on the budget. But so far as consumption is concerned, I would like to say that urban consumption has been doing well for quite some time. In fact, immediately after the COVID, urban consumption has revived very well. But I think in the last few months, we have seen rural consumption also to have picked up. And we are very optimistic about rural consumption because the monsoon this year is doing well, is expected to do well. Agriculture is expected to do well. The crop sowing so far has been very satisfactory. So therefore, the agricultural production is likely to be high, and that will put more hands in the hands of the rural people. Quite naturally in this season, and because of monsoon and because of good agricultural, good agricultural output, the demand on Narega has also come down. Then so far as, FMCG sales, for example, the FMCG sales over the last few months in the rural sector have actually outpaced the urban FMCG consumption. So we are quite optimistic about the rural consumption, to have picked up. So consumption is picking up, and certain measures like, for example, the free rice scheme is leaving that much more money in the hands of the rural people to spend on their other consumption. And inflation, the whole idea of bringing down inflation is that to reduce the burden on the people, both urban consumers as well as rural consumers. So if you measure, today the inflation is at 5.1. So just measure, quantify, if the inflation goes to, let us say, 4%, that 1% difference and that 1% additional money which will be available, if you just try to extrapolate on that basis, how much of surplus will be left in the, disposable surplus will be left in the hands of the people which they are going to spend on the economy. I think the contribution to the growth will be enormous. So therefore, inflation management, a stable inflation at 4% will be the biggest contributor to our GDP. And we are moving towards that. This latest print which went up again to 5.1 vis-a-vis the earlier number of 4.75 was mainly caused by the vegetable prices. Past experience shows that they have been seasonal, but we have to see how this year plays out.
I want to just have a couple of more questions. Banks or financial entities exposure in unsecured lending, personal loans, even project finance has come under RBI's attention because of rising bad loans. But if you look at the numbers in March 2024, loans to agriculture sector, the bad loans were the highest, and then came industry. Do you think, is there a need to explore raising the provision requirement for agriculture loans so that banks can price it effectively?
If I remember correctly, subject to correction, with regard to agricultural loans, the latest GNPA figures are about 6.5%. I think that was March 24.
24, yeah.
Yeah, it was about 6.5%. 3 or 4 years ago, it was 10%. So it has come down. And I would not like to comment on any specific sector, but I would just like to draw your attention to the expected credit loss framework, which we have, the draft of which we have put in place. It's a draft which we have put in place in the public domain. We are getting the comments. Based on that, we will issue the circular on expected credit loss. So when that circular is issued, it will address all such problems of, any higher NPA or risk buildup in any particular sector, not just agriculture, but in every, wherever it is visible. But today, as you are aware, the GNPA levels are at a historic low. The bank's GNPA is 2.8%. So far as the NBFCs are concerned, it is at about 4%. In fact, if you take out the, the NBFC loans which are under resolution in NCLT, etc., the GNPA is less than 3%, and or around, about less than 3%. So therefore, I think overall the problem of bad loans is now well contained. But we have to remain there. That is why, we keep on giving all those cautionary advice. It's not as if there is a big problem and we are worried and we are trying to deal with it. It is basically the current times are good times. We don't want the bad times to come back. We want the good times to last, and we want the good times, to put it in a metaphorically, we want the good times to become even better times.
Right. You love cricket, so the question is that one of your favorite cricketers, Rahul Dravid, he loved playing test matches. Now, but as the RBI governor and given the volatility in the external world, you must be forced to play T20 cricket almost every day. How do you cope up with it?
Well, first of all, I mean, I would like to say that whatever, I mean, Anant Goenka just said all those nice things about me. But whatever we have been able to do, I must say very clearly that it is the outcome of the effort of the entire team at the Reserve Bank, the entire team in the Reserve Bank of India. I cannot corner all the credit to myself. We have a good, robust team in the Reserve Bank. So it is the entire outcome of the entire teamwork. So modern times have become much more uncertain, much more, there are new challenges coming every day. And so therefore we have to deal with it. I think, I don't want to be philosophical, but I think the principle is to maintain your cool. And I think the word Captain Cool has been mentioned about Dhoni. So the approach has to be a mix of Captain Cool Dhoni and Rahul Dravid's approach. But having said that, let me say that both the cricketers did not play to draw the game. They played to win the game, and I think both of them have won the game. So that's our commitment. That's our endeavor.
Finally, Governor, your this term ends in December. I would want to say whether are you open to another stint as RBI Governor?
I don't know, as December 10th is approaching, I think I'm increasingly confronted with this question. But honestly, I'm really focused on my current work. And I said it elsewhere also. I'm completely focused on my current work. And I don't think, anything outside that. So focus remains on the current work. And what will happen in the future, one has to deal with it as and when the situation arises. I mean, why do I sort of worry about that? Let me first focus on the ball which I am now playing.
Yeah. We'll invite a couple of questions from the audience. Yeah, Shobna.